Hey everyone, this is Trader Tim from EminiMind bringing you another monthly market analysis, this time for April 2015. As always, trading futures, options on futures, and retail off-exchange foreign currency involves substantial risk of loss and is not suitable for all investors. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your original investment, so don't trade with money you can't afford to lose or money that, if lost, would change your current lifestyle. Past performance is not indicative of future results. So let's jump right into the ES. Chart in front of you here I have is the daily E-mini S&P. In the last couple of weeks, we've tested the retracement, the 50% retracement from the lows back here in mid-December to highs. And we pulled back to right about the 2030 level. We tested it once, had the nice rally, didn't quite break highs, but we came up to it, and this little consolidation up here did act as a little bit of resistance, which you can see in the tails, where the market kind of comes up to a level, comes into this range, and then immediately towards the end of the day sells off and closes just below that range. So you can see 1, 2, 3, 4 selling tails up here at highs, which is certainly a stance for the bears. But now the fact that we've come down, we've touched 2032.75s a second time and then a third time, and both of those tests were immediately followed by a rally off of that support level. And then today, Monday, we've got a very strong big body candle, engulfing candle that encompasses both Friday, Thursday, and Wednesday, and even Tuesday's body, but the entire trading body and ranges here from these last couple of days. So that's a very strong bullish candle. If I go to the market profile, you can see how this here is Friday and Thursday, and we not only traded above value high, which I've got noted over here in the green lines here. We are trading most of the day above the value high and the point of control, but most of the day's price action is occurring above value high. So it wasn't it really, we opened and then we immediately broke out through value high of not just the previous day, not just the previous 2 days, but the previous 3 days of trading. And we've been essentially forming a new balance, a new range up at these new highs. And so if we can just take out this prior swing high back here, that will give us, so if we can take out 20, we'll just call it 2083s. That will be a very significant level that will signal kind of, if you took out today's candle, you had a little bit of a descending triangle forming here, and so we've not only broken out of that last couple of days, but we've broken the downtrend line. And so as we have a 1 test, 2 test, 3 test, and then this downtrend line break, we are now clear for takeoff essentially up to this 2150 level. So we'll see if the rest of the week here we can get a little bit more push and take out this prior swing high, and then the prior swing high, and then finally the prior highs, all-time highs. And so when we're trying to identify where the action points are, it's when we have these multiple tests or when we're coming up to a resistance level. Those big congestion levels make for good action points. So if you were bearish and we were coming up, we were coming off lows here, a good trading opportunity or trading action point would be when we come up to resistance level. And if you're bullish, a good action point would be when we come down to support levels. And so placing trades around these congestion points as opposed to trading right in the middle of this range is a much higher reward to risk ratio. So we'll be looking for the ES over the next month, possibly a little longer. But now if we start to break this swing high, the second swing high, and then all-time highs, it could be a very quick rally, as we saw back here in December as well as in February. It really only took 3 weeks or so to go from the bottom of the range up to new highs. So we could look for that same kind of price action to return here, and I would look for the volatility index to decrease as the ES is moving higher towards this 2150s. And then when we get up to that level, we can pull a new anchor from lows down here up to whatever those highs end up being. And if we go a little bit higher, the highs that we might end up using for an anchor point to just kind of forecast out a pullback would end up lining up with these prior resistance levels, which would be a new support level. So you can kind of see how if you forecast out, potential moves in either direction, kind of a plan A, plan B scenario, how we can use these support and resistance levels in conjunction with the 50% retracements to get some very good action points in the market. So that's what we'll be looking for the month of April. Lots of good trading opportunities. Things should stay really good, certainly through Memorial Day. Then usually in the summer there's a little bit of a slowdown, but the ES tends to be very technical. The ranges are just a little bit smaller. And then come Labor Day, more volume comes back into the market. And it's usually the FOMC meeting announcement following Labor Day weekend that we actually see the markets get a lot more volume and ranges increase in the fall. So from now until Memorial Day, looking for some more great trading opportunities, and we will talk to you again soon. And as always, if you have more questions, feel free to shoot me an email over at the blog. Tim@EminiMind.com is my email, and the blog is EminiMind.com. Thanks. We'll talk to you soon.